The Nigerian Manufacturing and Non-Manufacturing Purchasing Managers Indices for November 2021 remained below the 50 index points at 47.3 and 47.5 index points respectively, indicating that the country's economy contracted in the period under review. According to reports from the Central Bank of Nigeria, the contraction in some of these sectors signifies the need for sustained stimulus to strengthen the recovery, which remains fragile. The Apex Bank also maintains that the improvement in real GDP was driven mainly by growth in the non-oil sector by 5.4%, reflecting the importance of ongoing CBN interventions and fiscal stimulus measures alongside efforts to further diversify the economic base and strengthen growth-enhancing sectors. Well, joining me to look at this and, of course, the economic output in the year 2022 as we move in this year is the Director of Research and Strategy at Chapel Hill, Denham. Thank you so much for your time, Mr. Tajuddin Ibrahim. Good afternoon. Thank you for your time.
Good afternoon. Thank you for having me on.
Yes. First, I would like your direct reaction to this report from the CBN. And what do you think are the fundamentals driving this figure? We are still below 50, about 47.3 and 47.5 index points for November.
Well, I think on the manufacturing index, I believe that it is an indication that output is still rising at a much slower rate, and it suggests slow growth pace in subsectors like the cement sector, and also food production area of the subsector. So it is an indication that we are seeing a slowdown. While we recognize that the number for November for manufacturing is higher than the number that we achieved in the month of October, we bear in mind that it is still below 50 points, which is a source for concern in our view. And our sense is that there is still need for the monetary authority and also the fiscal authority, more importantly in this case, to keep supporting the overall economy in terms or in form of interventions. If we talk about the non-manufacturing sector, the case is worse because we have the index falling below the level that it was in October, and at the same time also below the 50 points. The key driver of that, largely speaking, is concerns around the insecurity in the country, because non-manufacturing speaks to trading, it speaks to supply, and it speaks to distribution of goods and services across the country. But in a country where you have security challenges, it will be a lot difficult for people to transport such goods and services from one place to the other. Nobody really wants to be kidnapped. Nobody really wants to die. So there is need for the government, in this case, in my view, to strengthen security and ensure that all those challenges we are having either decelerate or is completely off in the very near term.
I want to stay a bit with the manufacturing sector. We know of the Finance Act and the 10% excise duty on 1 liter of carbonated drinks and all of that, and that has generated reactions. Now, if the sector is already feeling this way at this time, what effect do you think this would also have around the manufacturing space? We've seen the DG come out to say this might lead to job losses, revenue losses even for government. I'd like your reaction to that.
Well, I think if we take it, one step at a time, I think let us start from the manufacturers of those carbonated drinks. One thing that we understand is they would be producing just like the level they were producing before, or they would produce more. And in terms of the impact, it is negative for their business, and we suspect that they would have to bear the impact of that on their profitability, because they would have to pay that tax, which is 10 naira per liter. And our analysis shows that the Nigerian consumers are those that are really going to be affected, which means that, let us take a 50 cl bottle of one of these carbonated drinks. I don't want to mention a name. Is sold for 150 naira. So if you capture a 5 naira increase in that regard, what it means is that you would have to sell it for 155 naira. And we are in a country where we don't have the required number of lower denomination notes in terms of our naira currency. What it means is that over the medium term, probably before the end of this year, consumers should expect to pay more on carbonated drinks as the producers pass the cost to them. We will probably be buying a 150 cl bottle of carbonated drinks in this country for about 160, 170, and our sense is that most likely it can get to 200 naira per 50 cl bottle. It is not good for businesses. Generally speaking, it is not good for the Nigerian consumers, but our sense is that we would have to just bear this as well in terms of our pocket. Our view is that it does not really have a big impact on inflation, considering that we have the basket of the consumer price index in itself has only 1% of non-alcoholic drink in the entire basket. So the impact will not be material in the short term, but over the medium term, consumers are really going to feel the pain in our view. But we recognize that it will be a source of income for the government, and I think it is not badly placed in that context, in as much as the government is ready and willing to do something that will be of benefit to everybody with whatever they make from such a tax, in our view.
Now, the interventions by the Central Bank of Nigeria are something that we can't go without talking about all aspects of the economy before we go to the fiscal side, which should also complement what the monetary side is doing. But what would you say about all of these interventions aimed at driving diversification? Are we really moving at the right pace?
I think let us start from pace. The reality is that we are not moving in the right pace, in my view. And I'm going to, explain this a bit further. Let us start by, first of all, commending the monetary authority of the CBN, and in particular, let us, commend the CBN for all those interventions. They are positive, and they are, broadly speaking, supportive of broad economic growth and recovery. Bear in mind, well over 1 trillion naira has been directed towards supporting the manufacturing sector. Well over 500 billion naira in the past couple of quarters have also been directed to support the agri sector. The CBN is trying, but one thing we have to bear in mind is that the required amount of money needed to underpin the recovery and performance of the manufacturing sector, of the agri sector, is much more enormous than what the CBN has been able to disburse so far. I give you, I put this in context. In the entire country, we have well over 41 million nano, micro, macro, and small, big enterprises, that have really suffered in the past, 12 and in the past 18 months or 2 years, just because of COVID-19, impact on their businesses. Nevertheless, the CBN has only been able to support around 130,000 MSMEs so far. So that means, the remaining well over 40 million are still, looking for support. And, the CBN cannot do it alone. This is where the fiscal authority intervention is very important. And this is why also on a collaborative note, that should be a consideration for seeking solution in the capital market, in my view.
Great stuff there. Now, almost finally, a lot of global issues that we have to contend with in the new year, and it's the third week in January, moving so fast, and a lot of projections and reprojections. I guess the IMF will be out with their outlook also very soon. But in your overview, with what you've seen, Omicron is still a threat one way or the other. What is your projection for growth in 2022, all encompassing both the manufacturing space and non-manufacturing space?
So I think what we have put out there, as Tapo Hill Denham, is that we are most likely going to see economic growth around 2.7, 3% in the year 2022. Our view is that, that growth will remain, supported by, several interventions by the CBN, and also underpinned partly, most likely in our view, by recovery in the oil sector of the Nigerian economy. It will be non-oil sector led, but we expect some recovery in the oil sector of the economy by the time most of the installations that were not operational during COVID-19 era, but by the time they become sort of stronger. But we have to say that there are downside risks, and Omicron and any other variant of COVID-19 are major downside risks to our growth expectations. But we think it should be a slightly better year for Nigeria versus 2021, assuming that we are not swept away by political distractions, in my view.
Okay, if we can do this in 1 minute, inflation popped up. We saw the figures from the NBS earlier today. Yes, I know, but it's a topical one and a little bit of increase. Were you expecting that?
Yes, we were expecting it. Our belief is that inflation most likely will rise this year to an average of about 16.8% throughout the year. Most likely the pressure will start in the early part of this year. And if we further see increase in interest rates, the impact could be a lot worse than expected.
It's a good way to leave it. I've been speaking to Mr. Tajuddin Ibrahim. It's your first time on the show. We appreciate this. He's the Director of Research and Strategy, Chapel Hill, Denham. Do enjoy the rest of your day, and thank you so much for your time.
You too.